Hi, this is Cindy Kendall again. If you are going through the entire training, this is going to be video 3. If you have not started from the very beginning and are just jumping in to look at the expenditures, which is the biggest change that we've had in this year's annual financial report, that's fine. You're more than welcome to be here. But we're going to go through part 2 of the annual financial report, which is including all of the expenditures. And we're also going to go over the GASB 54 requirements. Again, GASB is the Government Accounting Standards Board. And the statement that we're going to be dealing with has to do with our ending cash balances and the breakdown that's going to be on page 9 of this report. So with that, we will proceed on. First of all, have you saved your work lately? If you're working on the annual financial report while you are watching the video, we need to make sure that we are saving often so we don't lose any of that work with all the interruptions. So here is the current version of the annual financial report. You can see that it's marked as non-GAAP as a default because most of the cities in the state are on a cash basis. And you can see that there are numbers in this form just so we can show you how they flow to other pages in the form. But the black font, if you are just joining us, is numbers that you're going to be supplying to the form. The blue are calculated and will go forward into other pages of the report, so you don't have to worry about keying them in again. If you remember, columns A, B, C, D, E, and F are all your governmentals, and they will total into column G. In this area, column H is all blanked out because there should be no expenditures for the proprietary in this area. And the same is true for the tax increment financing. Those are all blanked out. But whatever totals are in G, they will then follow forward into I, which then goes to page 1. Let's look at what's here. The thing that's different from last year's report is that we're asking for all of the police expenditures to be put into one line. We don't care about how much is operating versus capital. We aren't going to have any detail for land acquisitions or any of those things in any of the programs anymore. The total for general fund, and if you would have any special revenue expenditures, maybe you have your benefits coming out of your special revenue benefit fund, you might have some that are related to the police department. And the same thing flows down for all of the different programs. So the first program is going to be public safety, and you can see that's the first 14 line. And you can see I kind of cheated, and in order to get everything on one page, I have hidden some of the blank lines. If you need those blank lines because you have a special situation, a special 28E agreement under public safety, there is space to put that, even though it doesn't show here on the screen. The same is true for your public works. Your public works, of course, are probably going to have some expenditures in your special revenue because that is where you should be accounting for your road use tax. This is the expenditure side. So in this situation, we're doing some roads, bridges, or sidewalks. If you have any street lighting that you charge to the road use tax, then it would be going on line 18 and so on and so forth all the way down. Your road use tax expenditures, if you lay them on here first, you can see that those expenditures would then match the expenditures that you have in your road use tax report. If you then go back to this form and you have some local option sales tax, perhaps you're using that towards your bike trail or something like that, which is all the way down in culture and recreation. You'll have the road use tax and the local option. Maybe you have some property tax expenses that are covered for benefits for your employees. Those all would get broken down by the various programs that are designated. So when you get all done with that special revenue fund column, it may mean that you have 3 or 4 or more different funds all included in that one column. The same thing is true when we get to the proprietary, or it may be true when you get to your debt service or your capital projects. Multiple funds can be in each column, but it's designated by fund type. Okay, now we're going to go on to page 7. But here we have community and economic development, and this is where you can see that the tax increment financing column C does have the ability to enter information there. Now, if you're putting your tax increment financing in any other areas, you should really question whether or not it's being classified correctly in your chart of accounts. So this is where you're going to have your tax increment financing information. I would also like to draw your attention to line 66. In some communities, you pay for all of the general government insurance in one area. Other communities prorate it out across multiple areas. In that regard, then you will have your tort liability line item would have some expense there, and other communities will not have that. As we go on to the debt service, you can see that there is the $65,000 in that particular field, and that is going to be the principal and interest that was paid during the fiscal year for your general obligation bonds. And that is the only debt service that should be reported in this area. They don't want you to spread it across the programs. They want you to put it all on line 71 through 74 so that we can see all the principal and interest that was paid on the GO. It doesn't matter what the source of that money was, it's a matter that you're paying for a general obligation bond. The next section H is for the capital projects. And this is called regular capital projects because we want it all in the governmental side, not on the enterprise side. You see it's still blank over there. This is where we're going to put all the capital projects for the regular government. And that is separate from the TIF capital projects, which you can see on line 79. So if you had a TIF capital project in the general fund, it would be on lines 79 through 82. In this community, the capital projects were activated and they have $137,000 that is designated as a capital project in the tax increment financing area. But it is reflected under that capital projects because, again, you cannot have expenditures in the tax increment financing fund itself. So then, again, the total is on the bottom there, and it will flow forward. So we've got all the governmental activities taken care of already. If you have your chart of accounts broken out so that you can see a total, this is a good time to check that. Because if you missed a program or you missed an account, all these little checks help so you don't have a big headache at the end of the report. Now we're going to talk about page 8, which is the enterprise. And you'll see that the breakdown is back, or for this particular type of accounting, it never went away. But the breakdown is there. They want to know the operation versus the capital versus the debt service. For those of you who are seasoned clerks, you may recognize that before, the capital and the debt service for the enterprise were all aggregated, and you only had to put the total for capital and the total for debt service under proprietary. Now, this form requires you to know how much was water, how much was sewer, or whatever your enterprises are. They want the breakdown for that kind of detail. Again, if you have the internal service funds on a budgeted basis, they need to be reflected on line 126. You have that you need to give some detail. So line 126 is just a title line, but you do have the opportunity to give the detail on line 127 and line 128. If it is not a budgeted, or if you budget it in your special revenue, then it of course would go in the intergovernmental on the prior page. So here we start out on this page with line 130, which is the total expenditures. Does this match the totals that you reported to the council? A lot of times you find that a expenditure was miscoded and so you make a correction on it. It's a good idea to make those corrections and reflect that to the council, just so they know that it's there. I mean, it was just a misposting. That's not a big problem. But it's good that you check it to make sure that your total expenditures equals the total expenditures that the council has. Additionally, we are now going to talk about those transfers out. You have two breakdowns here, the regular transfers out, and then you have the internal TIF loan and repayments, which is in the transfers out area. Okay, again, we are looking at regular transfers being from one fund to another, so the total transfers out will equal the total transfers in. But you can see a little bit more detail here when it comes to the internal loan from TIF. You can see that $200,000 is coming out of here, and if you look at your page 5, you'll see where the $200,000 went in. Sometimes it's not so clear, because maybe you have some transfers out of your proprietary that are split between a capital project. You're going to use some of your sewer user fees to pay the GO bonds for that project. It may not be an easy identifier. We would recommend that you have a tally sheet of those transfers, so that if an auditor would come in for either an examination or your regular audit, they can see the breakdown of each of the transfers individually. Do transfers in and transfers out total? As we said before, they should. And if they do not, it'll be caught when we have the error page examination. Okay, so now we're going to end up with total expenditures and other financing sources, which includes your subtotal of expenditures for all funds added to the financing sources, and that's going to sum for you. But don't panic here. You see all those errors? We don't want to put you in a tizzy, because we're going to explain how to get rid of that right now. Let's talk a little bit first about your ending fund balance. Do these fund balances, which are calculated, you see they're in blue, but do they match what you say is the ending fund balance for each of your different fund types? Again, if you have sub-funds in either general or any of the fund types, you may have to add them together to see if your council reports come up to this total. I've always used a little cheat sheet and put those together so that as I finished the general fund all the way through this report, I could see if that one tied. If it matches, then I would go and do my special revenue. And if that matches, if you want to do each page and then come to this to see if it matches, that's fine. But we want to make sure that at this point it matches. Now, how far off can you be before you worry about it? $1, $2 is because we're putting whole dollars into this report, and you don't deal with whole dollars. You deal with dollars and cents. Your computer or your manual books should balance to the penny. There's no reason why they wouldn't. But because we're dealing with whole dollars here, if you're off $1, don't worry about it. Don't even have to put a note about it. If you have to make an adjustment at the beginning of the year, be sure that it's documented, because we want to be able to share this information with the council and with the citizens and auditors or whoever else wants to look at it, because these are available on the website and they're available as a public document in your office. The Government Accounting Standards Board requires the ending cash balance to be broken down into these 5 different categories. And we're going to go through each one of those. The first one is non-spendable, and that is automatically going to be your permanent funds, because again, you've got perpetual funds that cannot be spent, and then those gifts. Usually those are pretty large gifts. It's not going to be a $500 gift to the library. It's going to be like millions of dollars where you can use the principal only. So they're non-spendable. That's the principal is non-spendable. The next one is your restricted. Restrictions are because of an external party, the grantors or constitutional provisions, which would be your road use tax or your local option sales tax, because that's the citizens that are telling you how you can or cannot spend it. It is restricted. There are special ties to it, but it could be in the general fund as well. But it's definitely going to be all the dollars that are in your special revenue, because remember, special revenue means special strings. It's governed by an outside party. Your tax increment financing is going to be designated. You can only use it for the purpose of the urban renewal plan. Your debt service is going to be restricted because it can only be used for the principal and interest payments on your general obligation bonds. And your capital projects, that's most likely going to be part of it's going to be grants and so forth, and it's already been committed to outside contractors for projects. So those are all restricted. For committed funds is when the council, in formal action, meaning in writing by resolution or ordinance, prior to the end of the fiscal year, are saying we're going to commit these funds to a revolving fund, or we're going to use these funds for XXY. But it's got to be done by either resolution or ordinance and prior to June 30, so that you know, and so do all the citizens who read the minutes in the newspaper, exactly what they're committed for. Assigned is a little bit softer. These are designations that the council could make after they see how the fiscal year turns out. They're going to put an extra $5,000 back because the fire department didn't spend all their budget, and so they're going to kind of boost up the savings for the fire truck this year. Again, that's after June 30, so it's after the council sees what those end of year things are. The unassigned is anything that's left. So if you have an ending cash balance of $649,000 and only $250,000 of it was committed, then the remaining is unassigned. For some of you, it may be considered unappropriated surplus, which means that the council may be using it to do something in the next fiscal year. Maybe they didn't get a project done in this fiscal year, and so that money is going to fall over into next fiscal year. The other time is when the council just has estimates for budget, and so sometimes it's right on task, and other times it may be a little below, and sometimes it might be a little bit above. So this is the unassigned, and again, this is strictly for your governmental fund types. The spreadsheet will total all of those things up for you. If you do not have the correct amount in your calculations for the unassigned, you will get an error on the error page. Now, you also notice that all proprietary or business type funds are included on line 269, column H. All funds that are garnered or that are collected for your user fees are designated for that specific utility. There's nothing else that's going to be using those funds. Then we look at the total requirements, and the total requirements should equal the total resources on page 5. Again, if they do not, then you're going to end up with an error on the error page. Another reminder, save your work often. We're getting down to the point where we're going downhill here. We're almost done. We're getting close to that finish line. So if you need to take a break, this is the time to do it, and we'll prepare the next video for you on how to finish the page 10 and how that is going to flow to page 1, what you need to do on page 1 to finish that off and get it out to publish. And you'll want to have that coordinated with your newspaper, or if you're posting, you'll want to have that done as well. We'll talk to you when we do the next video.